Okay, well, we'll get started here. So thank you for joining us today. I'm Scott Eldridge. I'm the chairman of African Gold Group, and I'll do a brief introduction here before our CEO Danny Cavo presents the company. So this is sort of the second chapter in our ongoing updates, and again, we do intend to do these sort of on a monthly basis or as needed, depending on news. So our most recent news, as everyone knows, is that we just closed a very significant $11 million financing. And keep in mind, we originally announced a $5 million financing. So we more than doubled that. And we had very strong participation from probably 4 new institutions that had never been shareholders of African Gold Group in the past, as well as a strong participation from high net worth individuals, retail, and also management and insiders of the company. Just to take a step back and chat a little bit about the news that we saw over the weekend, something that I found very interesting. One of the very well-known US or global investors, Warren Buffett, through Berkshire Hathaway, it was reported that they took a $500 million position in Barrick. And what I noted there is that was obviously a participation in the equity exposure to the gold price versus owning physical gold. So I do think that is a strong message, not just for Wall Street, but now for Main Street, that we do have such a strong bellwether name in the US now participating in the equities. And obviously that's a great time to be a shareholder in any gold company, particularly after African Gold Group, as we're very well cashed up here to go execute on our plans. And everyone is aware that our plans do include some significant drilling, both under the category of infill and step out. So Danny will chat about the infill drilling that will only stand to galvanize an already very robust feasibility study. And then on the step out side, we'd love to demonstrate the blue sky potential of this project. You know, we're sitting at 2 million ounce in resources. We'd love to demonstrate that it can be 3, 4, 5 plus. And now with that financing closed, we've got you know, some wind in our sails here. And Danny's going to chat a little bit about our upcoming drill programs. So without further ado, I'll introduce Danny Cavo, our CEO. Thank you.
Thank you, Scott, and good morning to everybody in North America and Canada, and good afternoon to everybody in UK, Europe, and South Africa. As Scott mentioned, my name is Danny Cavo. I am the Chief Executive Officer of African Gold Group, and I'll be giving you a presentation update on where we are right now and where we're going in the next few months. So just bear with me and I'll get this on the screen. There's an opportunity to ask questions. I think you can do it through the chat facility. Obviously, we will answer as many of them as we can, time permitting, and please just send them through as you go, and then I'll get them towards the end and be able to answer them. All right, so welcome to the presentation of African Gold Group. I'll just refer you to the disclaimer on page 2 of the slideshow. In terms of our overview, some of you may have seen it before, but I think it's clear and very important to talk about this at the beginning of every presentation. We are TSX.V listed. We have a clear vision to become the next mid-tier producer, and we have a flagship gold project in southern Mali that's construction ready, fully permitted, with an opportunity to produce 100,000 ounces per year by 2022. I think there are a few things that are unique selling propositions for this company. The one is that we have an experienced management team and independent board. All of us have a proven track record in financing, construction, and operating of mines in Africa, and I'll talk a little bit about that. We are a near-term gold producer. There's not many of us in this West African space right now with an opportunity for high-margin gold in a mining-friendly jurisdiction, and we'll talk a little bit more about that. We have significant exploration upside. Scott touched on this, and we'll spend a few minutes a bit later on in the presentation talking about where that exploration upside is, because I think you'll see that it's actually very, very exciting. We also believe that we have significant upside potential in terms of the share price for investors. And again, we just going on the exploration side, we believe that in the next 9 to 12 months, we have an opportunity to significantly improve the resource and subsequently the reserves from a phase 3 drilling program that we intend to commence in September 2020. And finally, I think with the new board and the management team, we have a clear strategy for growth and adding shareholder value. To introduce the board, I'm not going to dwell too much on this. I think any of you that have been on the call before would have met the board. But Scott Eldridge, as he mentioned, is chairman of the board. Scott joins us based out of Vancouver. He has significant experience in the financing side of the business and also significant experience in senior roles within the mining space. Jan Erik Bak, our vice chairman, he is a former chief investment officer for Eurasian Resources, but comes from a financing background and has a significant amount of experience in raising money in these markets. He also spent a number of years at Hatch in their global finance division, so he has a good understanding of how the engineering and the mining side fit together. John Begerman, very well known in the industry, specifically in the Toronto mining space, has been very successful in his career through some fairly senior roles within large corporates such as Goldcorp, but more recently has spent a lot of time taking companies such as this through the process of exploration, construction, development, and operations. And he currently sits as a director of Yamana Gold. Myself, I think I don't have to introduce myself too much, but I'm the CEO. I'm also a director on the board. My background is operational mining. I've spent 28 years building and operating mines in Africa, certainly for some large corporates such as Glencore. And in my time, I've built around $2.5 billion worth of projects from greenfields right the way through to full production. And then finally, Pierre Pettigrew, who is at Deloitte Canada, very, very good independent member of the board, a good mentor, very experienced in international government relations, and a very active member of our board. In terms of the key management, we've got Dr. Andy Rompel. He's on the call and would be available to answer any very specific geology questions. He's an expert in the Begerman belt, having worked with Anglo American as an advisor for many years in all of their Malian projects. And then Daniel Bizak, our VP Corporate Development, and Sekou Konate, who is our country manager, who is based out of Bamako. Many, many years in the civil service in Mali and understands how it works and obviously has good relationships with government. And then for the last 20 years has advised numerous mining companies, including companies like Barrick and IAMGOLD, in acquisitions and things like that within the Mali space. So Sekou, we're very pleased to have on board and a very keen and active member of our team. Just in terms of the capital structure, as I mentioned, I believe that we're undervalued relative to our peer group. If you have a look at the bottom left, you'll see that our enterprise value to total resources is very low down that curve, and we have a great opportunity to move that up as we move into the construction space. You can see after the last private placement that Scott mentioned, the shares outstanding on the options and the warrants. There are a significant amount of warrants that could bring in additional cash into the business as the share price increases, as they're sitting mainly between 25 and 30 cents. And as Scott mentioned as well, you can see a big shift now in terms of the shareholder structure, with a large number of institutional shareholders coming in the last raise to take a fairly sizable chunk of the equity in the company, which is very good news. As was mentioned in the press release as well, management took up some of the private placement as well, which indicates their commitment to the project, and that is quite key for us as well. And there are some of the funds that have come on board. There's not all of them. There are many more, but there are just some of them. I think, as most of you know, I've been at the helm since August of 2019. We've made some significant achievements over a short period of time. So I don't want to go through this slide in detail, but you can see that from August 19, a new management team was appointed. Very quickly, we realized that we needed to go ahead and deliver a new definitive feasibility study. Drilling commenced about a month after that in the middle of the rainy season, which was good because we managed to get drills quite easily. And by the end of early January, we finished phase 1 drilling, and all of the results that started coming in from phase 1 were better than expected. Scott mentioned some of the step-out drilling that we started to do in February as phase 2. These were really where the results started getting very exciting, and you can see some of the numbers there: 124 grams a ton, 6 grams over 21 meters, and so the numbers went on. And unfortunately, we had to stop that program a little bit short because of funding. However, that is one of the first places that we intend to go back into once we start to drill again. And then you can see around early June, we had a fairly large board restructuring with the appointment of Scott as chairman and Jan-Erik as vice chairman, and some other board changes. And at the same time, appointed Canaccord as our financial advisors to assist us in the main capital raise. And then July, we released our definitive feasibility study on time and around 20% below budget. What do the next few months look like for us? Well, we'll go into some more detail, but just as a highlight, we intend to start some drilling in September of this year, so about a month's time. There are two very focused areas that we're looking to do. The one is to upgrade the current resource through some infill drilling, and the second would be commencing about a month later in starting to improve the strike length over our main shear zone of our current 2.3 million ounce resource. The intention is that we would have all of that stuff done and a new resource reserve update done before the end of the first quarter of this year, of next year, and that will give us hopefully some very, very good results to continue to look for growing the resource even further. At the same time, in parallel to the exploration focus, we are looking at obviously the capital raising. I'll talk a little bit about our financing strategy later on in the presentation, but for now we have booked up Beaver Creek, and we have a London and Europe roadshow hosted by Canaccord. We're doing the Mining Journal Select, which is a very exclusive event for only a handful of mining companies, so we're very privileged to be invited to that. And then a further roadshow in December before everybody shuts down for Christmas. So as you can see, a very active marketing campaign to push this project hard in terms of the capital raise. Unfortunately, with where I am in South Africa, I may not be able to travel personally to all of these places. So some of these may be virtual, like Beaver Creek. But I hope that in the next month or so, we will be free to travel and we can get moving and out on the road telling our story. So just as a reminder, for those that follow the company, we've just delivered a very compelling definitive feasibility study with a post-tax IRR of 41% and an NPV of $226 million. That means that we are a very near-term gold producer, and the strategy has not changed there. The intention is to try and get this into construction as soon as possible, but clearly that means raising finance, and we'll talk about that. The definitive feasibility study is completed to a much higher than normal engineering standard. That does one of two things. The first thing is that it gives us a whole lot of confidence on our capital estimate of $136 million. And the second thing it does is allow us to fast track that construction schedule from what would typically be 22 to 24 months down to 18 to 19 months. And overall, this will deliver a 3 million tons per annum plant with an annual gold production in excess of 100,000 ounces with a very, very compelling all-in sustaining cost number of $782 over the life of mine. I think what's very attractive here is that it's a very simple contractor-driven mine plan, open pit. with a gravity and carbon in leach process plant. Oxides only, there are no challenges around sulfides and very little transitional material. And this allows us to really keep the cost down on our mining and our processing operations. Just for those a little bit more technically minded, leach kinetics here on this ore are very compelling. We are able to leach out 96% of the gold within a 16-hour period versus what typically would be a 24-hour period in other West African plants. So I think the test work has allowed us to optimize the process plant to a level where we can reduce the size of the tanks, we can reduce the amount of reagents that are required to process, and therefore bring down the operating cost to a number, life of mine, of around $704 an ounce. Overall, the resource is 2.3 million ounces, as Scott mentioned. The slightly lower grade of the resource is offset, as I mentioned, by a much lower mining and processing cost, and that is how we maintain a very comfortable $704 an ounce. We're also fully permitted and licensed. Our mining license is valid until 2045. We were also issued our environmental permit in 2015. That is renewable every 5 years, and we're in the process of doing that. We expect to get that into government very, very soon. We've been a little bit inhibited on the social distancing side by not being able to do the public consultations. However, everything else is done and we're ready to submit. And then I think I'm going to keep mentioning this because it is so key to the USP of this site, and that is the fact that we have only drilled 4 kilometers of 30 kilometers of shear zones to get the 2.3 million ounce resource. Just continuing on some key numbers in the definitive study, a stripping ratio of 2.67 to 1. That is key to keep the mining costs down. It means that we are moving significantly less waste, which is obviously a cost with no benefit. It allows us to deliver 27 million tons of ore into the process plant over 9.5 years. The 96% recovery of the gold allows us to extract 728,000 of the 755,000 ounce reserve. And you can see that payback is around 3.8 years and project net cash flows of 325 million. And I think what's really important on this slide is to show you the sensitivities at the bottom of the page. You can see at the gold price that we used in the definitive feasibility study financial model of $1,530, the numbers look very good. And they're the numbers that we have delivered to the market. Clearly, if you start looking at current gold prices and long-term gold prices today, you will see that that number could be significantly higher than that. And you can see at a number of above $1,700 an ounce, that NPV number jumps up more than 100 million US. And likewise, the IRR becomes very, very compelling. So I think that we've delivered a very robust but conservative feasibility study that definitely has some significant upside just in terms of the financials alone. In terms of the resources and reserves, I would say the same thing. You will see in the notes on the reserves that the reserve calculation was done at $1,450 an ounce. Clearly that number would be much higher now based upon current gold prices. And should we put that number in, we would see a significant increase in reserves just from changing the gold price by pulling in some of the marginal ounces that we left out because of cutoff. We haven't done that because we intend to do that at the same time as completing our next phase 3 drilling program. So I think you'll see that with the additional drilling and the improvement in the gold price, you will start to see some reserves moving northwards of the current number of 755,000 ounces. Just in terms of all-in sustaining costs, the graph on the right-hand side, you can see that we're definitely down in the lower cost quartile of West African operations. We're very comfortable with those numbers. We're very confident on the sustaining and the capital cost numbers there, and also on the operating cost numbers. So I think that we are very capable of achieving those numbers, if not beating them. So moving ahead now to looking at exploration, and I think as the chairman mentioned at the beginning of this presentation, this is really key to a parallel strategy that we are following at the moment. Clearly, our main intent is to bring this mine into production, but I think everybody is aware that this process of capital raising can take a period of time and a number of months. And we're in the very fortunate position of having raised some very good money in the last private placement to be able to allocate some funds to continue exploration drilling. And for me, when you have so much available shear zones identified, it's crazy not to go back in there and do some additional drilling in parallel. So we've looked at this in terms of 3 phases. Some of them will run in parallel, some of them will run after each other. Phase 1 is the resource upgrade, and we're targeting to do that within the next 9 months. Phase 2 is a strike extension, so that means extending the strike on the current main shear zone over the next 12 months from its current 4 kilometers to something that could be potentially upwards of 8 to 10 kilometers based upon our regional exploration that we've done. And then finally, which would probably occur after the resource upgrade, we would start to tackle some of the newly identified shear zones. And the one on the map there is what's called the Gosso target, and I'll talk a little bit about that in a minute. Why do we have so much confidence in being able to do this? Well, we have some great regional exploration that has already been done. We are reanalyzing all of the geophysics results that have been done over the period of exploration here. We're also getting some very compelling grab samples from the Gosso target showing some high gold grades. A great regional indicator in West Africa are historical artisanal workings. As you know, there are many artisanal miners in West Africa. However, they can normally only mine down the first 4 or 5 meters, leaving a very good record of gold mineralization behind in the softer saprolites where they can't tend to get down into. And then obviously we've done some prospect drilling on some of the other greenfields targets with auger drills that are showing certain anomalies of gold. And at the same time as doing all of that, we intend to keep exploring on our Faraba concession to the north of our mining concession and the Kobada Est concession to the south. That's part and parcel of deliverables that are required by government, but also gives us an excellent opportunity to continue to test the extension of the shear zone strike through to the north of the main shear zone and then into Kobada Est of the other shear zones. So let's just look at each of these phases in turn. So in terms of the phase 1 fast-tracked resource upgrade, we intend to convert the 575,000 ounces of inferred oxides that are sitting as part of the current resource model. Now, to put that into perspective, if you have a look at the top right diagram, you will see the purple colored area, which is our current reserve pit. That is the 755,000 ounces of reserves that we will mine out. Below the purple, you'll see the greens and the reds. Those are sulfides, so we're not interested in those right now, although certainly in the future, these will be a phenomenal potential resource. But if you have a look at between area 2 and area 3, and area 2 and area 1, you will see some very near to surface greens, yellows, and reds. Now that is indicating grade of over a gram a ton, close to surface, and that we currently have not been able to pull into our reserves because of drill spacing. These are sitting in the inferred resource, and these are the 575,000 ounces that we're talking about in this next 9-month program. We have a high level of confidence that we can convert these inferred oxides into measured and indicated resources, and historically we've managed to convert measured and indicated into reserves with about an 84% conversion rate. So the intention here is to target taking this current reserve from 755,000 ounces and trying to increase this to over 1 million ounces by doing this drilling. The intention is to start this drilling in September of 2020. We're just doing the adjudication on the drill contractors. We have equipment on site, and we believe that we could start drilling within the next 2 to 3 weeks. In parallel to this, we are looking very seriously at an extension to the main shear zone. If you have a look on this map, this is targeting in on the current resource pit. So the round orange shaded area is our current resource pit of 2.3 million ounces. The arrow is an indication of how far the strike goes along this main shear zone through Kobada, and in fact we believe it goes right through into Faraba as well. Therefore, we have a very good opportunity to target at least another 5 to 6 kilometers of additional strike on a continuous ore body that is showing signs of improving in grade to the north. The 3 holes that you saw earlier on of 124 grams a ton and 15 grams a ton, all of those came from within the step-out drilling that we've done in phase 2 drilling at the end of our campaign in February, and all of these were to the north of our current resource. So I think you can see from there that we have an opportunity to step out drilling to the north of our current resource. We already have 3 or 4 holes in there that have shown exceptionally good intersections and grades, and we believe that we will see improvement in grade and an improvement in resource by drilling that to the north over the next 12 months. And then the third phase is obviously to look at some of our other very exciting what we would call greenfields targets on our current concession. The Gosso target sits around 4 kilometers to the east of our current main shear zone. Thankfully, the artisanals have excavated a nice hole for us to go and have a look at the structures, and we can see immediately that these structures are identical to what we're seeing in the main shear zone. That has allowed us to go in and do some mapping and also to take some grab samples, and you can see from this slide that some of these grab samples are very, very compelling indeed. This is definitely a target on our radar within the next 12 months, and we believe that this will show very, very similar grades and size to what we're seeing in the main shear zone right now. And then finally, what we'll do at the end of this next 9 months or so of drilling, around about the end of the first quarter next year, is we will rerun the resource and reserves at the new consensus higher gold price. That will have the ability to bring in some marginal ounces that were left out before, plus all of the additional drilling results. We believe that this will show a significant improvement in resource and a significant improvement in reserves. Just back to the project construction itself, clearly we are still moving ahead quite aggressively to try and raise the capital for this, because this will give us exceptional cash flows. Just to do the sums, at $2,000 an ounce like the gold price is today, and $782 all-in sustaining cost, 100,000 ounces at 1,300 plus gives you a very, very compelling free cash flow that allows you not only to pay down the loans, but also to start to invest and grow the company quite quickly. So this clearly is a very, very defined target of ours to take this project into construction. Here you can see a 19-month schedule with first gold potentially by Q2 2022, but that's assuming that we could start production within Q4 of this year. We're very passionate about ESG, environmental social governance. We believe in our social license to operate, and we believe that being a good neighbor is absolutely paramount to a successful company and also a successful share price. As I mentioned, we are in the process of updating our environmental impact and social assessment. That should be done within the next few weeks and submitted. At the same time, we are continuing to take readings on site with a view that we would take the EIA to a level to meet with IFC performance guidelines or performance standards and World Bank guidelines. And that is something that requires significantly more readings from site. And the likelihood is this would be something that would be completed towards the end of this year. At the same time as this, we've spent a lot of time talking and forming relationships with the local communities. That's key. We've met with the local chiefs of the 2 main villages around our mining concession. And we have already started a very informal environmental and social management plan with those chiefs. Initially, that included sourcing labor locally. It included buying goods and services where we could locally. And then obviously, if we can't buy it locally, to use local Malian companies for goods and service procurement and also for contractors. And that has been very successful in the last 9 months. At the same time, we realized that malaria was a fairly challenging problem within the community because of a lot of standing water That's generally brought about because artisanal miners change the water courses and cause buildup of stagnant water, which is a breeding ground for mosquitoes. We've spent some time and money already in starting to spray around our mining site and in the local villages, and we've seen a marked reduction in the amount of malaria infections within our own mining camps, but also within the vicinity around the camps. Obviously, all of this will be developed into a very formal environmental, social, and management plan as we go through the construction phase. This will include consultation with the local chiefs on what projects that they're keen to be involved in, but typically these would be in health, hygiene, sanitation, education, agriculture, and the like. So I think we've made some good strides here. I think we have a very good relationship with the local community, and all of the feedback from the public consultations that we've had so far have been overwhelmingly positive. In following on with this trend of environmental sustainability, we believe in reducing our environmental footprint. Unfortunately, in Mali, there is very little grid power to power these mines. So almost every single mining operation here has to have a relatively large diesel or heavy fuel oil power plant. In our case, we've decided to move towards a hybrid solar battery energy storage system and thermal generator plant. In addition to that, we've decided that there are many more experts out there than us to do this. So we've agreed with a strategic partner for an over-the-fence power solution. That means that we will sign a power purchasing agreement with DRA and Synergy, and they will provide the power at a rate per kilowatt hour. It allows us to forecast our costs a lot better, but it also reduces the power cost from around 25 cents that you would typically see with current mining power plants to around 15 cents per kilowatt hour. And that saving translates into about $5 million US a year. Coupled with that, we are seeing a massive reduction in greenhouse gas emissions because of this. And you can see some of the numbers on the left-hand side here, but 5 million liters of heavy fuel oil, 14 million kilograms of carbon dioxide emissions, etc. So really, this is a win-win for us. It's a win-win for the community, and it's a win-win for the environment. So I think this is something that certainly a lot more mining houses should have a look at. It's all off-the-shelf technology. Most of the warranties on the solar panels and the battery energy storage systems are 20 years plus now. This is not blue sky. This is very much a state-of-the-art but available technology. And then I think the last comment on sustainable investment from an ESG side is conformance to legislation. We've formed a strategic partnership with a company called SAFE. They specialize in providing advice and solutions in terms of provenance and transparency in the supply chains. Now, this is key because there is new EU legislation coming out by January 2021 called the EU Conflict Minerals Act that requires everybody from producers to end users to be able to prove the provenance of the gold. Now, put that into perspective, the gold comes from our mine site, it transfers through a number of hands, through a refinery and into potentially a jewelry shop or some other manufacturing plant, and all of us will be required to prove the provenance of that gold come 2021. So we've taken the step of looking at that now. SAFE will assist us in designing our supply chain to be transparent all the way through the process from us to the refiners, and be able to do that through modern technology such as blockchain, which does not allow any tampering or changes of any of the information within the database. So it's early stages, but very important for us to make sure that by the time we get up and running, we have a fully transparent supply chain from start to finish in place, that anybody buying our gold can be very comfortable that it has come from a safe source without any possibility of any impact from environment or artisanal miners or slave labor or criminal activity. Mali itself is a large gold producer. In fact, it's Africa's third largest. The map on the right-hand side indicates to you that all of the major miners are operating in Mali and have been for many years. It's very pleasing to note that in this time, not one of these mines has ever lost a day through any form of terrorist or criminal activity. I believe that this is certainly the low to medium risk part of Mali. We're very close to the Guinea border, and it's very stable. In terms of the jurisdiction, I think that Mali has a very mature and responsible mining code to attract foreign investment, and the mining industry is one of the biggest contributors to GDP. So it's absolutely key that the mine keeps the government keeps these mines operating and investors coming in. Again, just to give you an indication of how much money has been pushed into West African gold over the last 10 years, you can see outside of Canada, it's by far the largest, which proves a point that it really is a growing region for gold investment, and more than 79 million ounces have been discovered in that time, which is very, sizable compared to the other regions in the world. I also believe that the fact that Mali operates as an economic union is very key for a number of reasons. One, because of stability of currency, and more importantly, for the ability to be able to attract skills, contracts and services from member states to tap into the best skills that there are in the region. It has an amazing mining pedigree in West Africa, which means that all of the goods and services and contractors that you require can all be sourced locally from Mali and the economic states. I mentioned up front that we have now a clear strategy for growth. I think this is key. Obviously, the key thing here is early cash flow. So there is no doubt that we intend to advance our Kobada Gold Project into production as quick as we can. Clearly, that will generate some sizable cash flow, which will be able to be used for organic growth, as you can see in the second picture there, by either expanding our current resource to a level where we can expand the output, or commencing exploration at our Madugu project option. And obviously right now, with what's happening in West Africa, disciplined M&A is very much on the table, and we are always continually looking at other projects that could join our pipeline of projects at the moment. In terms of our financing strategy, we are underway with that in terms of construction financing. We have a financing committee that's made up of the chairman, the vice chairman, the VP corporate development, and myself. We've retained Canaccord Genuity as an independent financial advisor, and Canaccord have been very successful over the last 12 months in raising around 1.4 billion in the gold space for companies. The funding strategy obviously encompasses building the project, additional financing for drilling at Kobada and Madugu, and corporate working capital requirements. And right now we're looking at a very coordinated process to raise that money. Clearly, at our current market cap levels, we can't dilute ourselves with too much equity right now. So the intention is to focus initially on senior debt providers, so the main banks. Discussions initially with those banks has been positive, although July, August is not the best time to be talking to people in banks, as most of them are on a beach or on a lake. But certainly I think when September comes around, the 2 or 3 banks that we've engaged with so far will be in a position to continue those discussions. There are 3 or 4 NDAs signed with those banks, so they have access to our virtual data room, and they're going through their due diligence process. At the same time, we are starting to talk to some more specialized debt providers, and those are just about starting now. And again, it's a little bit challenging right now with the August holidays, but we believe that in September we can go back and start talking to them with some earnest. And there's been a lot of interest in that area of finance. So clearly we are focusing quite hard on trying to raise or get term sheets for the debt side first. And then obviously we would move more into the equity financing as we secure some of that high level debt. Right now we're updating our financial model or our debt model to see how much debt the company can carry. Certainly within the next, certainly by the next conference call or webinar, we'll be able to give you a lot more detail on the financing strategy and how we're progressing. So just wrapping up from my side, we've delivered a very robust definitive feasibility study with significant upside. both in terms of financials and also in terms of exploration. We're a near-term gold producer. There's not many of us in West Africa right now, and we could produce gold 19 months after construction begins. I think we produced a very compelling but rock steady definitive feasibility study with some very compelling IRR and NPV numbers for 100,000 ounces a year at $782 an ounce. We're definitely undervalued to our peers in terms of share price and market cap, and that's something that we are working very hard to correct. We have a great management team and board on board. All of us have experience in building, financing, and operating mines. We have massive exploration potential, as you've heard, short-term, medium-term, and long-term. But overall, we believe that there is a massive amount more gold in the ground within our current concessions. And now we have a clear strategy for taking this company forward in terms of growing it into a multi-asset, multi-country company with assets in a number of countries in West Africa and a mid-tier producer. So with that, I've finished my portion of the presentation. So perhaps we can sort of open it out to any questions that may be coming in. So I have a couple of questions here. A couple came in before the webinar. I'm happy to go through a couple of these. And I see we have one or two questions coming in from the participants as well. So what I'll do is I'll read out the question for the benefit of everybody, and then I'll either pass it on to our chairman or I'll tackle it myself. So the first question that I've received is, can you give us an update on the status of project financing? Did new institutional investors indicate if they will be willing to participate in the main financing? So I think I've given you a fairly good update on the strategy behind the financing proposal. I think Scott mentioned up front that we are delighted to have some of these new institutional investors on board, and we've certainly seen a big sort of split in terms of the geography from where these institutional investors are based, which means that we're starting to get some reach into Europe, London, Australia, and as well as North America and Canada. And certainly some of these investors on board have indicated that they would definitely be interested in participating in the main financing. And in fact, already 2 or 3 of these have signed NDAs to have access to our virtual data room to start doing the due diligence that's required for the main capital raise. I have another question here. Are you in discussions with any existing producers in the region? Well, look, we have had a few interactions with other producing companies in the region. Clearly, it's a small world out there, and we all know each other quite well. There are some very good operating companies there, and we've had some discussions with them. I think the key here is that although we are very happy to engage in conversation and even give access to our data room, right now at current market cap levels, it would have to be a very good level for us to consider doing anything other than a strategic stake. So yes, I think it's very good to continue talking, and we will continue to do that, but it will always be with the shareholders' best interests at heart. I have another question here. How has the company been impacted by COVID-19? Look, we were lucky in the sense that when really the COVID-19 pandemic hit the world outside of effectively around March, most of our on-site activities had really come down to quite little. We managed to lock down the site quite quickly. We kept a core team on site to manage the site, but also to manage the last of the geological activities that were happening. We enforced very strict social distancing and COVID-19 protocols, and I'm very pleased to report that we've had no incidents either in the local villages or on site any COVID-19 activities. I mentioned that we really haven't had any delays on this project other than the submission of the updated or the renewal of the ESIA, and that is because of public consultations have been banned by government. However, we are now in a position to start moving back to site with drillers starting exploration programs within the next month, and we have to make sure that we continue to enforce the COVID-19 activities and rules and regulations quite stringently. Another question, when do we expect to obtain reputable broker dealer analyst coverage for AGG? We would expect that in early September you'll start to see initiation of coverage from one of the London institutions. That will be coverage hopefully delivered in the second week of September. So as soon as that comes out, I'm sure most of you on our shareholder list will have access to that. And then a second part of the same question came in about, it seems that AGG's pre-DFS messaging has now moved from near-term production to exploration drilling. I think I've answered it in the presentation itself, but I'll answer it again for the benefit of those that didn't hear it. Is that, you know, this is a very parallel process. We are in the absolutely desirable position of having a resource that is taken up in a very small part of our exploration in terms of our concessions. We have massive exploration upside here, and it would be crazy not to continue to drill that whilst we're going through the raising of the finance and the construction program. Clearly, it is an absolute priority to raise the main finance. We would like to take this into production as quickly as possible, and from the numbers you can see that the free cash flows generated are significant, and this would give us a huge springboard to be able to look at acquiring and growing our asset base quite quickly once we bring Kobada into production. So I think what you're going to see from us over the next 9 to 12 months is start of construction as quick as possible, and that is all dependent upon the raising of the capital, but also a large number of press releases coming out as we start to get some of our drilling results back, hopefully end October, right the way through to March when we update our resources and reserves. So I think that's what you're going to see over the next few months. And then I have one other come in from the participants. It says, sorry, I'm just going to read this. What do you think about the recent political crisis in Mali? Does it threaten the business of your company? Well, I'm not sure if everyone's aware, but there were some indications that there was a potential for a military coup in Mali today. That's not confirmed at the moment. They are not 100% sure what's happening. This is really the sort of final part of a number of demonstrations and protests that have happened over the last 12 weeks, where the people are not happy with the way the government are operating the country. My understanding is that that has been resolved in the sense that a new parliament would be formed. So it was a little bit of a surprise to see some news reports coming out of things happening in the capital. In my experience in Africa, these things are often overblown, and we have to wait to see more reliable news channels and exactly what is happening. Sometimes these are very localized, and although people may think that it's all of the military involved, it tends to be a small faction. So we don't know that, and it would be difficult to comment on that. All I can say is I hope that things are resolved smoothly, and we can move on and get this project built as soon as possible. And I think there's no other questions coming in on the chat line, and I didn't receive any more from email, so I'll hand it back to you, Mr. Chairman.
Well, thanks, Danny. Appreciate you going through it in great detail there. And as I mentioned in the beginning, we would like to do these updates, on a monthly basis, but off the back of positive drill results, we can certainly do them on a more frequent basis. And we certainly appreciate everyone's time here, whether it's morning, afternoon, or evening for you. Thank you very much for joining us. And for those on the line that participated in the financing, we welcome you aboard as shareholders. And I think we're all excited to get the drill started here and see what those infill and step out results look like. So we'll just step off here, but thanks again for joining us, and definitely looking forward to the next update. And in the meantime, any participants on the line, feel free to reach out to Danny, myself, anybody else from our team. We're always available by email and phone, and happy to have a chat.
Yeah, thank you very much.